Welcome to the show, David. How are you doing?
Hey
Boom.
guys, great to be here. Big fan of the show. Thanks for having
Thanks
me.
so much.
Look at
Wonderful
this
background.
background.
Look at
Thank
that
you.
in
I
the
was channeling the
hangar.
Army earlier, and
Yeah,
Catherine Boyle, on the other day. So
it's
That looks
fantastic.
fantastic.
Yeah, it's awesome. Yeah, I mean, I'd love to start with just kind of like your background, introduction,
sure.
and kind of your path to Andreessen, because I've been following you for like over a decade on Twitter, and I think this is the first time we ever met in person or on
You
Yeah.
had to be in one of my first 100 follows
For sure.
back when I was in college. Just
For
being
sure.
like, this guy looks like a Chad. Let's throw him a follow.
Still chat, I guess. No, awesome.
Yes.
Yeah, it's been circuitous. Let's see. I studied biochemistry as an undergrad, so I
Oh
actually thought I
wow.
was going to be a doctor. Worked for a super successful serial entrepreneur out of school, a guy named Rory Riggs, who had started a bunch of biotech companies, ran a railroad, and started a giant private equity firm called Royalty Pharma, which we can get into. It's a fascinating business.
Sure.
And then I joined Spark actually back in 2011 up in Boston. Essentially, it's like the one non-GP at the firm. I was like a
Mhm.
23-year-old, analyst associate. And it was an amazing experience. We were investing out of Fund 3 at the time. The firm had already been pretty successful at that point. They had seeded Tumblr and put a bunch of money into Twitter when there were 10 people. We wrote the first check in Oculus when I was there.
Wow.
Wow.
So, great pickers. It's kind of where I learned, I would say, like the craft of venture. Ended up going deep into fintech at the time, and in some ways getting lucky. I helped source and seed Plaid back in 2013, and a bunch of other companies when I was there. I always thought of myself more as a founder than an investor, and so I ended up leaving and starting a fintech company in 2013 called Bond Street
Mhm.
with a good friend of mine named Peyton Sherwood, who had been running engineering at Venmo. They ended up getting acquired by Braintree and PayPal in 2013. I pulled them out to go start that business, which was in the small business lending space, which was challenging, but we built a great team, which is what I'm most proud of. And ended up selling business to Goldman. That's kind of how I ended up joining the
That makes
firm.
sense.
We came
Awesome.
in kind of through the side door,
Yeah.
Yeah.
and got merged ultimately into what became Marcus, which was their consumer business.
Oh, that's right.
Uh, Payton ended up inheriting. He had a real job. He had like 70 engineers to manage. I had a more amorphous, I
Off
don't
the
know,
org chart.
Yeah, I
yes,
remember when I was following you, it said firm-wide strategy, and that sounds like something that would normally be like the CEO's job. So, can you
yeah.
actually explain like that sounds extremely important
He
firm-wide
was
strategy
he was
at
pulling the
Goldman?
puppet strings,
But yeah, what decisions were you making? What was the culture like at Goldman back then?
It was it was fascinating. I thought I was going to go there candidly and get like suffocated and micromanaged because that's what
Hmm.
my friends did, 10 years before in banking. And
Yeah, yeah.
fortunately, that wasn't my experience. I think in part because, I
We
had
need
no
this.
fear.
We
I
need
had
this
spent a lot.
DCF yesterday.
Yeah,
We're
exactly.
not working on Sundays. That's good.
Um, you know, I yeah, I just started firing off emails when I got there, honestly, to
Hmm.
like, Marty Chavez, who's the CFO, and the heads of
Yeah,
banking and asset management, just kind of running around
cool.
and trying to be helpful to people and really just like mapping the place.
Hmm.
You realize that even people who had been there for a decade or longer didn't know kind of what all the different component parts of that firm did.
Yeah.
And it was fascinating because it's not a normal kind of operating business like I don't know, an American Express that has a big consumer commercial business.
Hmm.
It's really a confederation of a lot of little businesses who sort of fight for collective resources under these common kind of divisional umbrellas. But it's also really fascinating because if there's something interesting to do on the outside world, there's probably somewhere to put it.
Hmm.
Meaning you could be an equity investor, a debt investor, an advisor, a customer, an acquirer. So it's fascinating to kind of bridge, you know, the world that I primarily lived in, like the tech ecosystem, and then try to help, Goldman navigate that too. To be clear, I wasn't the head of firm-wide strategy. I worked for a woman named Stephanie Cohen who reported to David Solomon, but
Sure.
I was the weird kind of startup entrepreneur guy, kind of running around and trying to help her, frankly, get connected in the tech world. And she's now at Cloudflare and doing a great job there.
Yeah, it's still a really cool role. How much of Goldman's structure is a function of either like legal firewalls between different teams, or just the idea that if you have a specific desk, you need to be able to manage their own P&L and kind of account for their business independently and then align incentives towards how that team is doing? Or is it more just like sclerotic because it's an old company?
I think it's a little bit of both. I mean, there's
Hmm.
definitely some, kind of regulatory bridge between like the public and private side and what can be
Yeah.
shared legally. But I think the more interesting history. And there's a great book called The Partnership, which I think is a great kind of business history book, even if you didn't work at Goldman Sachs. I think for 140 years, it was one of the most entrepreneurial places in the world,
Wow.
right? It was not, it was a firm that had to scrap. It was started like by Jewish immigrants, basically. It was not sort of JP Morgan or a lot of these other, kind of white shoe firms. And they started basically in like the factoring business. And then, entrepreneurial people would raise their hand. It was a partnership. They'd give them a little bit of money and they'd say, I want to go build a new business. So somebody started the merchant bank, somebody started the wealth management division, somebody started, Europe. And it was not a business built through M&A. It was a business really built organically, brick by enterprising people. And I think it's just such a fascinating history. And so part of that is the culture, right? It really was a partnership. And I think that confederation is kind of the evolution of that, which was like, you want to feel like a CEO, right, of your own kind of individual business, even that is like a trading business within, a much larger, division. I think the last like 10, 15 years it has required an evolution from that in some ways, right? I think, the firm went public. Then you had, the tech bubble, the financial crisis. The financial crisis, I think, was like a terrible experience for Goldman Sachs. If you remember the vampire squid and like the blood funnel, like that was the brand, unfortunately, for a long time.
Yeah, they actually did pretty well during the financial crisis. They like the best of the worst performers, which was like somehow terrible even more because then all the negative attention came on the firm.
It did amazing. It did amazing, and part of that was they had really talented people. Part of that was was actually technology. They built their own kind of unified core risk system, so they understood across every division kind of what their exposure was to the housing market, and they were able to hedge basically that exposure, and they didn't lose money, and then they made a ton of money, kind of coming out of that crisis, which again didn't hurt the brand, to your point, or didn't help the perception in the market, unfortunately. But I think ultimately, like more recently, and we can, I just find their history fascinating.
Yeah, it is. It's so fascinating.
I think they've become more of a company than a partnership, right? And I think to do that, you kind of need operating leverage, and therefore kind of it's a bit tighter kind of at the top. And I think my perception is that it's made it a less entrepreneurial place over time, right? And instead of sort of giving an individual person the agency to make their own individual decisions, especially from a technology perspective, you need more centrality, you need more leverage, you need more kind of command and control. And I think you've seen that actually benefit their share price, right? If you look at Goldman's market cap, even in the past few years, it's actually done really well. I think a lot of that is through that kind of centralization to some degree, but I think it does come at the expense to some degree of the entrepreneurial dynamism that existed, for again 140 years. It used to be one of the, most lucrative places in the world to work, and nobody's crying for Goldman Sachs employees, to be clear. But I think it's a different culture, and it's going to look more, in my opinion, like a normal bank than it was previously, which was a broker dealer and a partnership.
I mean, responsible to shareholders over the partnership.
When you catch up with old, peers, colleagues, et cetera, how do you feel like Goldman and other firms of that caliber are reacting? How would you rate their kind of reaction to AI specifically? Are they just buying a lot of it so that they can kind of say like, look, we're doing AI, or is it like, truly organic sort of ground up movement, or some of both?
I think it's changing very quickly, and I think, again, not to pick on them, but historically, like and I think in a lot of banks, there was this culture of like, if it wasn't built here, we're not interested. And I think that was like the wrong decision for a very long period of time, because the world, kind of changed, around them in a lot of ways. But I think actually Marcus, despite its challenges, was actually a good cultural kind of catalyst in this point. They leverage a lot of third-party technology because the consumer business, hadn't existed, previously. And I think the CIOs and the CTOs at these firms are just understanding that like there are some things that we should build internally. If it's core to our competitive advantage, fine, we should own it ourselves. But almost everything else we should outsource to third parties and leverage the best of what exists, right? And it's actually informed a lot of how I spend my time here, in part because, as a founder, it was very challenging navigating these big institutions to understand, who is the decision maker. And then you get inside these firms and you realize that if you're a division head running, a 10,000 person, 20,000 person organization, it's not your job to know what's happening on the frontier, right? Certainly not at the seed and Series A stage. And I think one of the things we've done explicitly, and part of what's been useful to do, from New York City, where I sit, is be a bridge between those ecosystems, right? And kind of convene the CEOs and the leadership teams of every kind of major financial institution in America, and then curate, a group of 20, 30, portfolio companies, non-portfolio companies that align with whatever their strategic priorities are. And, it's kind of a win-win-win. You can accelerate, the go-to-market for the seed stage business. You help this sort of incumbent, understand what's coming. And it's helped us come to conviction, on investments and just feel like everybody's sort of winning in that dynamic. But the rate of adoption is happening very quickly, just to answer your question more specifically. And I think this is true in financial services. I think it's true broadly in enterprise, both because there's bottoms-up adoption, like engineers are, using, whether it's GitHub Copilot or Cursor, we're, big investors, obviously. But then there's top-down pressure, right? I think any CEO, any board member can plug a prompt into any of these models and understand intuitively the impact that it's going to have on their business. And I think financial services in particular are so human capital intensive. At Goldman, they call basically the back office the federation. And it's kind of a Star Wars, I guess, reference, but it's still humans sitting in Excel, not even using enterprise software necessarily, right? And across legal, compliance, risk, vendor onboarding, and so much of that should be AI. And I think they're recognizing that and beginning to adopt it a lot more aggressively than I've ever seen, which is exciting.
Do you get a sense that there's been innovation happening in some of these more traditional financial firms or even hedge funds and things like that is potentially groundbreaking but not being released as products, right? Like Jim Simmons didn't, discover an algorithm that could, make 60% a year forever. And then he was like, yeah, we shouldn't just like productize this and let anyone use it.
Jane Street's had GPT-6 for like a decade.
We should just use it. So yeah, how do you, I'm curious if you have any kind of insight there. Because if you discover something like, if you discover a machine that just makes money, you should just,
Well, there was a rumor a while ago that Google's just their treasury management system was so advanced, they were like, we could just become a hedge fund, but that wouldn't align with our mission.
Totally. I mean, look, there are a bunch of like, quant hedge funds that I'm sure they have to have had, great kind of proprietary technology that have given them an edge, whether it's Renaissance, as you mentioned, or, Two Sigma or Jane Street. It's hard to know exactly what's in there. I think they purposely keep it so secret.
Yeah.
And I was listening to your conversation with Jack earlier. I forget if it was him or you guys who had said it. Like, if you found something that is actually money printing, like, don't go sell it to a bunch of other people. Just like raise a giant fund and do it yourself.
Yeah. Well, can you talk about the transition to Andreessen? How did that happen? Sure. You see people cross over from Goldman into venture every once in a while, but it does seem like you had a somewhat unconventional path. So how did that conversation first spin up? And then what's the experience been like over the last couple of years as the fund has scaled?
Yeah, it's been awesome. I mean, I've known actually Alex Rampell. So he was the one who kind of recruited me to the firm back in 2021, but I've known him for over a decade. So I met him, I think, originally through Plaid. We'd done the seed at Spark. He had led a later round. I pitched him Bond Street when he first joined the firm in like 2015, 2016. He passed. We stayed friends.
Many such cases.
And then when I was at Goldman, I ended up helping them put a bunch of money into Carta alongside Meritech and alongside Andreessen. And he and Mark had worked on that investment. And then in PPP, like during COVID, I was trying to figure out ways to help the firm plug our balance sheet into the economy, right? I'd run a small business lender, and I was afraid that, small businesses weren't going to be able to get the capital they needed to actually survive, and we could pledge unlimited assets to the Fed window, and yet I thought technology and fintech in particular was the right distribution channel. So he and I were chatting a bunch in that moment as well. I actually left Goldman in October of 2020, went to go do this kind of weird thing with a hedge fund guy to buy a stake in Sotheby's. We can come back to.
Very cool. That's amazing. I love that.
And he came in March. He pinged me in March of 21. He's like, how's Goldman? I'm like, wouldn't know. Haven't been there for 6 months. He's like, what are you talking about? I'm like, yeah, I never updated my LinkedIn. Here's this kind of weird thing I'm doing
Yeah.
with Sotheby's. And he's like, can I put you in front of Mark? And I'm like, well, twist my arm. I've never met Mark Andreessen. And that sort of precipitated a bunch of conversations. And, fortunately, they wanted to open up a New York office. And it was just I had always admired, Andreessen from a distance. It really is a firm kind of run by entrepreneurs. And yeah, it was a unique opportunity to kind of plant the flag here in New York City. And, that was almost 4 years ago. We're 100 people full time in New York now.
Wow. Yeah.
Oh,
Can
wow.
can you
Amazing.
map Andreessen a little bit for us? Maybe compare it to Goldman. Obviously, a lot of entrepreneurial energy, but then there's specific funds, there's specific offices. It is a unique firm in so many ways. How has it changed? How would you describe it now? Eric Tornberg was on the show and said it's very specialized, and I think a lot of people in the audience were like, "What are you talking about? They do everything." And it's like, well, they're specialized within the firm, and there are specialists at the firm. And so, what's that been like, and how have you experienced the last couple of years as Andreessen has scaled?
Yeah, it's fun. I think actually, before Goldman, Bond Street had been the biggest business that I ever worked at, which was, several dozen people. Goldman was 40,000 people. So I think that scale has actually helped because Andreessen doesn't feel that big to me.
Yeah.
I think in venture it's still big, but compared to Goldman, it's not. Just to give you a sense for kind of how the firm is organized today. So, last year we split the early stage venture business into three. We raised three separate funds. So there's an infrastructure fund, which my partner Martin Casado leads with Anj, Jennifer, and Zane. We have American Dynamism, obviously, which David Yulovich, Catherine, and Aaron help lead. We have an AI apps fund, which Rampel, myself, and Anish help run, which is basically anything consumer, anything B2B. Fintech kind of being a horizontal across either.
Sure.
And then there's a separate bio and healthcare business, a games business, obviously a large crypto business, and then a growth fund that kind of sits across all of it and will invest in things that are kind of inflecting. And then uniquely, I think the firm is 600 people. The vast majority of our headcount is a large operating platform, right, across a bunch of functional different kind of areas, whether it's go to market or marketing or people practices, an internal kind of capital network team, and these are resources that we help make available to our entrepreneurs and really to try to tilt the board in their favors, right? To help them build great businesses. And that was kind of the ethos of the firm from the very beginning. I think Mark and Ben were sort of customers of the best venture firms as entrepreneurs. And it was like, 5 people in a checkbook. And their view was like, we're going to take no salary. We're going to reinvest 100% of our management fees back into building this operating platform. And that sort of benefited from economies of scale, over time.
That makes a lot of sense. Can you talk about how the kind of platform teams have evolved over the last, as long as I was actually in the portfolio back in like 2012, and they did these like seminars for B2B sales and marketing and PR. But now you're seeing new value add pieces of the platform, whether it's introductions on Capitol Hill now, like almost like a lobbying light version. But how has that evolved, and how are you thinking about that going forward?
Yeah, I think part of what has happened is kind of it has further decentralized in some ways. So in some ways it does kind of remind me of Goldman, where each fund is almost its own division that can kind of allocate management fees and talent at will, to some degree. And as a result, ultimately, like we think about each fund almost as a product to serve the entrepreneur. And so I suspect that as David and Catherine are thinking about the American Dynamism business, it's how do I leverage these management fees to build the right capabilities that are unique for that, specific customer, right? Which might be, more of a presence in DC, for example. Martine might think about it differently on the infra side than on the app side. Same thing in the bio and healthcare business, like having a deep relationship with all the, payers and the big hospital systems, to help again accelerate the go-to-market of the bio and healthcare, portfolio companies, super valuable. And so it has sort of further decentralized, further specialized over time. But I think the same ethos is the same. It's how do we come with capital, but also help these businesses grow and scale, and take what often was a first-time founder and give them all the kind of superpowers and capabilities of being like a scaled CEO. Like that was sort of the mental model I think that Mark and Ben started with.
I wanted to switch gears for a second and ask you about something that I feel like is kind of potentially on the horizon. So I've been hearing various teams are working on putting secondaries on chain, which I think is going to be potentially hilarious and potentially a disaster. We'll see. We'll see. I'm cautiously optimistic, but on the topic of secondaries in, just
companies staying private longer.
liquidity in the private markets, it feels like this has been this like perpetual like promise. Like the whole industry is very excited about it, and I don't feel like at any point, despite so much the sort of broad growth of the private market over the last 10 years, it doesn't feel like we've made that much sort of meaningful progress. Can Silicon Valley learn at all from, Wall Street is notorious for creating new financial products that can actually be, successful and scale and become big markets in of themselves. Do you expect secondaries to get there at any point in venture? Do you spend time thinking about that at all? It feels somewhat inevitable, but then at the same time, we've all seen how illiquidity can be, such a feature and not just a bug like some people would have us believe.
And are you talking specifically about like kind of employee secondaries or
just like broadly, like just bringing like
well, there's a public fund right now. There's a public
and that was
company
gonna be my
that
next.
owns a number of SPVs and look through exposure into various assets.
It's more so bringing at the same time exposure, liquidity. I'm interested to see if you have any type of thesis here. The other thing we saw recently was Co2 coming out with a new fund that's a smaller fund with like a $50,000 minimum check size. And I didn't fully understand that move outside of wanting to create a product for maybe the next generation of, family offices and things like that. But I'm curious if you have kind of any type of vision on the next 10 years of.
I don't, it's interesting. Like, I think there's been, I think there's a couple of big secular trends that are sort of happening. Like one, certainly companies are staying private longer. And I think that's driven the scale of the venture business, right? You can put more dollars into your winners over long periods of time. So it kind of makes sense to be able to capture the economics there.
Yeah.
I think the other kind of secular trend has been bringing, and we're still early, I think, in that kind of wave, bringing alternative investments to wealth, like to the kind of mass affluent kind of wealth management channels, which, historically have largely been funded by kind of institutional investors and their like. And I think, the big private equity firms with REIT structures and credit products have done that much more aggressively. Venture is still, relatively speaking, a small asset class and a small business, and historically hasn't, I think, needed in large part to tap the kind of wealth ecosystem. And, time will tell how aggressively you can scale a venture business. I don't know that that's that's not the goal necessarily, right? But I think if you're Apollo or Blackstone, trying to raise hundreds of billions of dollars, in real estate funds, wrapping it in a REIT product and distributing it through retail makes sense. And to do that, you need liquidity, right? Because an individual investor doesn't have the same sort of like
time horizon.
They need access to cash for various reasons. So you need to give them outs. And so the Co2 fund, I think, was a crossover kind of public and private fund with some liquidity gates. More power to them. We haven't done something like that.
Can you talk about the application layer in artificial intelligence? There was this meme for a while, every wrapper is going to get steamrolled by the foundation models. I imagine you've been investing throughout that process, but has your thinking evolved, and have any of the recent milestones that we've seen, Windsurf going into OpenAI, that feels like, okay, maybe it opens the floodgates to every foundation model needs some dance partners here, and maybe that's an opportunity for liquidity at the early stage investing side. How have you evolved your thinking on the application layer and the opportunity there, whether in B2B or consumer?
Yeah, I know. I mean, I think you're right. Like, I don't know, 18 months ago, I feel like the pejorative was everything's a GPT wrapper, and the fear was every, state-of-the-art model company was going to eat every workflow. I think that hasn't been the case. And I think the, declining cost basically of like intelligence has benefited the application layer. And not just in like text and reasoning, but across kind of every modality, whether it's voice or video or image. And so, both, I think the quality of entrepreneurs has kind of, I would say increased dramatically even in the past year. I think people building specific products for, with a deep understanding of the industry and the specific workflow that they're targeting, has changed, again, in the last like 6 months. And I think what you're seeing now is also not the sort of bottoms up. You're also seeing top down. You're seeing companies sort of own the end customer, own the end workflow, and then begin to build their own models, right? And I think the fear was sort of the inverse for a long period of time, but it's been easier to kind of route, prompts to different models and maybe capture, the highest margin, queries in your own model, right? Or, improve your own economics by owning some of that, that workflow internally.
Yeah.
And I guess like my hot take is that, moats still matter. And there, a lot of them are largely the same, at least in my mind, right? Like, I think AI is an incredible tool for differentiation, right? The idea that a voice agent can do the workflow, in some cases 1,000 times better than the human is amazing. But the technology, I think, is an ephemeral advantage. I think it's an amazing tool for differentiation, not necessarily the source of defensibility. And I think a lot of the defensibility in my mind resides in the things that have kind of always been true, right? Owning the workflow end to end, deeply embedding yourselves within your customers, right? Becoming a system of record, having a network effect, being a platform. And I think these were all the heuristics you would always kind of look for when evaluating software companies historically. I don't know that this time is that different. I think the impact and the idea that the software can actually do the work is radically different. And if you can capture labor budgets more than just IT spend, the TAM is radically different, much larger. But that's at least been kind of my own, mental model, over the past, several months.
How are you thinking about open source? Mark's obviously been very outspoken about open source. I've always wondered, will there be a red hat of this generation with AI? Stable Diffusion was kind of thinking about that. And you could imagine that some company crops up that's like a for-profit, very successful company, but built on top of open source. Are you looking at that? Are you optimistic about that? Or is it more just like philosophically open source is a good thing for the ecosystem more broadly?
Yeah, and honestly, it's a better question for Martine because,
Sure.
they spend more of their time on the infra side, in that community. But, we are big believers and investors behind open source. I mean, we're big investors in Mistral, for example.
Yeah.
In Europe, which is, one of the leading open source players. Mark's obviously on the board of Facebook, and I think what they're doing with Llama is amazing. So I think there's opportunity for both. And, I think in many ways, open source is a great kind of, competitive force, which is also kind of drive down the cost of a lot of the, intelligence, which, again, it can be great in its own business, and I think is also benefiting the application layer.
Jordy, last question.
Last question. How much do you expect the adoption of AI to mirror what we've seen in fintech, right? It feels like fintech's, been so transformative over the last decade plus, yet at the same time, every once in a while, I still need to, write a check or, use any number of different things. Does that provide any type of mental model for you on how to think about, how people and companies and countries adopt AI?
It's an interesting question. I haven't thought about kind of the through line there. I mean, I think AI, this may not be shocking, but I think it sounds cliche, but it's going to change everything. It's going to be everywhere. And, even the kind of intersection of fintech and AI is just, I think, incredibly interesting. Like, I think my bias for the past several years has been to invest in fintech companies that lead with software, as opposed to financial products. And it's part why we built that incumbent network. It's in part because of the culture of these firms are changing. But, again, the ability to do the work within these organizations is so radically different. There's just massive labor budgets to be able to capture. And so, again, I think we're going to see the adoption of AI probably proliferate even faster than we did, fintech products, although that happened quickly as well.
Yeah, makes sense. Well, thank you so much for stopping by.
My
It was
pleasure.
great having you. We have to have you back and talk more. That we could go on forever. But we'll let you get back to your day. I'm sure you have a lot going on.
Awesome.
Thanks,
Great to
guys.
catch up.
Fun to hang.
See ya.